Yo, welcome to another weekly market outlook video. Uh, this video is going to be covering September 30th till October 4th trading. And let's get right into it. So, I always begin my weekly market outlook on the dollar and on the higher time frames. So, here on the dollar, I do want to point out how we are going to close on the monthly candle here on Monday's trading, and I want to note out notice how we are creating this monthly fair value gap here, right? So once we close here on this monthly candle on Monday, we are going to create a monthly fair value gap. So this monthly fair value gap here should be treated as a some sort of resistance level. So if we do trade up into that monthly fair value gap, we should expand lower. But I do want to draw your attention to this here too as well. So, but however, on this higher time frame here, we have created this. We are still trading within this monthly fair value gap as well. This monthly BISI. So, prices could either bounce around in this area, but this is a weekly market outlook. So let's just keep it on the month or the weekly time frame. So we have previous week's low and previous week's high here. Noted them out. So coming into this week, I am anticipating for us to take out previous week's low just based on the weekly candle. But if we are thinking this in terms of power of three, the way we close here on this monthly candle will tell me if we will take out previous week's low or not. If we can make a closure below, the weekly candles, the prior monthly candles low, if we close below this level right here, 100.108, that means we will most likely treat this monthly fair value gap as a breakaway gap and create some sort of open, high, low, close candle. So I want to see us, if we can close below the previous monthly candle's low, then that means that we will take out previous month's low first before rebalancing this monthly fair value gap here. So, and keep in mind that this previous month's low is in alignment with the previous week's low. So it all depends on how we trade on Monday, because Monday, like I said, is the last day of the trading day on September. So just be mindful of that. And as of right now, I don't really have a clear objective, but after Monday's trading, I should have more information, more price structure to really not claim, but anticipate a narrative, a higher time frame narrative, weekly wise. But as of right now, the only thing that I do want to mention is, like I said before, we are creating a monthly candle, a monthly fair value gap here. And depending on how we close here on Monday and how we close here on the monthly candle, will suggest what we would do this week. But one thing that I do want to draw your attention to is the TGIF, or basically the open, high, low, close of this monthly candle here. So what does ICT states, or what does he talk about whenever he mentions TGIF? He talks about a retracement back inside the candle's range for a weekly candle, right? But if you apply his concepts to every single time frame, like he said, prices is fractal. If you apply that narrative and that idea, well, TGIF, you can apply TGIF to a monthly candle here. So because we are closing here on Monday, it appears that it might not happen, but we could actually close within this blue area of this little Fibonacci setting here. So that's just two things I do want to draw out for you guys is pay attention to how we close here on the monthly candle, and that that will tell me if we will retrace back inside this monthly fair value gap, or will we just continue lower, taking out previous month's low first. And yeah, just pay attention to how we close using the Fibonacci settings of a TGIF setup. So that's the idea for Dixie. Lower prices if I were to, you know, pick a side. And let's get onto the NQ here. NASDAQ. All right, so NASDAQ. We did end up creating a open, low, high close candle. And you guys could confirm that by watching my I forgot how many videos ago, but my previous weekly market outlook, where I was explaining how I wanted to see this monthly candle's high get taken, and we ended up taking that monthly candle's high. So what am I anticipating for this week? Well, we did close below this. We did close below the prior week's candle's high. So us closing below the prior week's candle's high suggests that we could trade back inside the weekly SIBI here. Or I'm sorry, not SIBI, but BISI, as denoted by this gray box here. So if we are going to see lower prices, I do want to see lower prices coming into Monday. And why would that make sense for us to trade lower here on Monday? Well, Monday, like I said, is the last day of the trading month. And if we are trading in accordance to the monthly candle and the monthly candle's TGIF setup, prices will, could trade back inside the 0.2 to 0.3 of this dealing range of the monthly candle's range. So that means on Monday we should we should close below this this 0.2 level here of the Fibonacci, and we should close within that 0.2 to 0.3 zone here, and that suggests the idea of us retracing into the weekly SIBI, or sorry, I keep saying SIBI, weekly BISI as well. So just pay attention to that. Like I said, I should have more information on Monday because I want to first see how we close on the monthly candle before I have anything to go into this upcoming week. But yeah, we created a weekly BISI. Pay attention to the TGIF on Monday, and yeah, if the monthly candle were to close right now, right, I would anticipate for us to take out the previous monthly high. So I do want to see this high get taken here. Unless on Monday we, God forbid what happens, but we tank and we close like down here, then I would come up with a new, narrative. But as of right now, if we close here on this monthly candle right now, I can anticipate for the monthly candle's high to be taken. The previous monthly candle's high. And yeah, that kind of basically wraps up for everything on NQ. Let's move on to ES. Same thing on the ES here as well, actually. So I took the TGIF setup of the monthly candle here on ES, and I drew up the TGIF setup where I wanted to see how low could prices, close within on the monthly candles range. And we do have this 0.2 to this 0.3. And what do we have residing inside the 0.2 to 0.3 of this, inside this little blue zone here? I'll make this color blue. What do we have residing in that blue zone? Well, if you draw it to the left, we have previous week's low. And previous week's low actually ends up being the weekly fair value gap's high. So we have a reason where we should continue lower. And notice how we closed below the previous weekly high. So that means that suggests that this weekly fair value gap here, this weekly BISI, could be a fair value gap that we rebalance. And besides this weekly BISI, there isn't any bullish fair value gaps here on the daily time frame, or 12-hour time frame or anything like that. We don't have much displacement. And if I zoom in here for you guys here, this move up, and this is the 4-hour chart by the way, is extremely lethargic. You can count how many but there's a lot of black candles here, down close candles here in this price move up. That doesn't show strength. So we can anticipate for all of this sell side liquidity here to be low resistance for us to rebalance inside this weekly BISI, and perhaps trading higher to attack previous month's high. And yeah, so like I said before, for overall here, I would wait for Monday's close and see how we close here on the monthly candle first before really having a concrete idea of what prices wants to do. But this is just the overall gist of what I anticipate could happen. So like I said, could trade back inside the 0.2 to 0.3 of the dealing range, and I do want to see prices rebalance this weekly BISI, and that basically sums up my entire outlook for NQ, ES, and the dollar for the week of September 30th till October 4th. And I think that's gonna be all. So overall here on the monthly time frame, if we close right now on the monthly candle, I would anticipate higher prices. Same idea on NQ as well. But yeah, let's go. I'm gonna go do a little trade recap over Thursday's trade, and the only trade I took this week. So Thursday's trade, September 26th, 2024. I did notice how we had a really large expansion during the Asian and London session. So we expanded a lot, right? And we created a bunch of these 4-hour, I'm not saying a bunch, but we created a lot of fair value gaps here. And we have displacement on the hourly time frame, the 4-hour time frame, even the 6-hour and 8-hour time frame to the upside. So this suggested me that we actually could be continuing higher on the higher time frame. But coming into the morning, at least, usually the morning session after the New York AM session, if we expand a lot during the Asian and London session, we could anticipate some sort of consolidation and some sort of retracement. We don't just shoot straight up all the time. We always have some sort of pullback and or some sort of consolidation, accumulation states. So I wanted to see how we would trade here at this 4-hour fair value gap once we traded into it. And I noted out the discount level here. So from this swing low to this swing high, I noted out, okay, well, we do have equilibrium of this price range. And I noticed how we had a really large expansion up, so we could rebalance fair value gaps. So instead of actually taking it long, I was able to short the markets. But you have to keep in mind that the higher time frame is bullish, that we should be continuing higher here. We should be respecting these bullish higher time frame PD arrays. But on the lower time frame, we are bearish, but we're bearish just so we could rebalance the fair value gaps and retrace back into discount. So on the 15-minute time frame, it's a little bit clear here, but I shorted with the idea that we could trade back inside the discount of the dealing range. So it's not like I'm shorting and targeting all-time lows. I understand my objective. I understand how low prices could go. And like I said, I noted out the discount, and we haven't traded back inside the discount of the dealing range yet. So on the 15-minute time frame here, you can note out how we have time frame alignment between the 15-minute and the 30-minute. Both time frames here are suggesting lower prices. And what aligns with lower prices? Prices trading back into the discount of the dealing range. So on the 5-minute time frame, I try to find some sort of fair value gap to enter off of to trade short. However, we had this 5-minute fair value gap, but this 5-minute fair value gap should be treated as a breakaway gap because of how we closed here on the very last candle of a fair value gap. We closed below the second candle's low. So that means this is suggesting strength, or not strength, but weakness in the markets. That means we're probably going to have a, fast move down. So instead of using this 5-minute fair value gap as a entry, I actually used it and used it in Confluence as a stop loss, because if it's a breakaway gap, prices shouldn't trade back into it. So if that's the idea there, I could actually replace that idea with my stop loss order. So I set my stop loss at the 5-minute fair value gap, and I went into the lower time frames to find my entry fair value gap. So we created this 1-minute fair value gap here, and it is a fair value gap that could be traded back into. So when prices opens up at 10:30, we trade into the 1-minute fair value gap. I get an entry, and then we started to take out the 15-minute and the 30-minute low, and then I set up some standard deviations for extra projections or extra targets. And it's an A+ setup. I understand time frame alignment between two time frames, breakaway gap theory, and the idea that prices trades and moves according to rebalancing fair value gaps, retracing back into premium or discount, generating liquidity or taking liquidity. And that's going to wrap it up for today's video. Thank you guys so much for watching, and until next time, peace out. Skadoosh.